Good morning and welcome again to the Potato Business Summit. My name is Mark Klompien. I'm with United Potato Growers of America. I want to take a look at some data and information from the current crop. We'll look at the 22-23 fresh potato market. We'll take a look at some shifts and some trends by variety in the supply situation, as well as taking a look at the market outlook for the remainder of this year and going into next year. We'll start, as I usually do, with the yellow potato category, and the yellow variety has really continued its unprecedented growth trend. We'll take a look at that here now. This is a look at the 10-year trend of U.S. fresh yellow potato shipments. You can see 10 years ago it started out at around 6.8 million in the 2013 crop. That continued to rise over the years all the way up until now. This year we're projecting 11.6 million hundredweight will be shipped of yellow potatoes into the fresh market. There's only one minor pause about 4 years ago. You can see that little decline there to 9.5 million in the 2019 crop. That was really related more to Mother Nature and its effect on the supply situation more than it was any shift in long-term trend for yellow demand. And it immediately picked up that next year and continued with that growth trajectory that you see on the screen there. Again, this is really an unprecedented growth rate and certainly not something that you're going to see when I show the other varieties, particularly reds and russets. This chart shows a little more detail of the current year yellow shipments to date. That yellowish background that you see there is the 3-year average. The dotted line across the top is last year's shipment numbers for yellow potatoes for that same time period, and then the red line is the current crop year shipments to date. So essentially the first 5 or 6 months of this crop that you see there on the screen, and you can see this really continuing that trend of growth. It's certainly well above the 3-year average, and for certain time periods above last year's numbers during that and shortly after the harvest window, as well as the lead up to the Christmas push that you see here. So 3.3% up over last year for this current time period, and it's over 11% increase over the 3-year average for that same time period. And just as a summary of that yellow potato supply data that we just looked at, the average 10-year annual growth rate in yellow supply is positive 6.3% per year. And you might recall, as I showed this slide in previous years, that's starting to drift down just slightly. A few years ago, that annual growth rate was close to 9 or 10%. But this is still incredibly positive, and like I said, that growth rate in yellows just really continues. The growth rate versus last year is up over 3%, that 11.6 million versus the 11.3 million from the previous year. And with that supply increase, we're also continuing to see the demand increase, and thereby not having a negative effect on the pricing situation. If you use the 5-10 pound bale price as a proxy for grower returns, it's currently up in that $22 range, which is very favorable and just a very strong, good market right now. One of the differences, I've talked about this before, but you really don't see any single geographic region dominating the yellow market like you do, for example, in the red market or the russet market. Certainly in the red market, it's Red River Valley, and in the russet market, it's Idaho. But there are some leading players in the yellow market, but no kind of, so to speak, predominant player that has just a lot more than any other region. California, most notably the Kern County area, Idaho, San Luis Valley, Red River Valley, they've really increased their supply in recent years of yellows. Those are the top 4 yellow producers. If Canada was a state, they would be the second largest supplier into the U.S. market, and their volume of exports from Canada into the U.S. continues to increase as well. So just in summary, the market supply volumes and that demand really continue to be very strong in this yellow potato category. Let's shift gears now to red potatoes. This is certainly somewhat of a different story. This is the 10-year trend for U.S. fresh red potato shipments, and you can see that it's certainly in the downward direction if I was to put a trend line on this, starting from back in the mid-2010s when red potatoes really hit their peak in terms of the fresh market, up close to 16 million hundredweight. It was fairly level, fairly flat there for a number of years, like I said, in the mid-2010s, before it started drifting down somewhat from the 2018 crop going forward. We're now down to a projection this year of 11.4 million. That will be the lowest we've seen certainly in modern history. And one other note on that, you might remember that yellow projection that I showed of 11.6 million, or a little bit over 11.6 million. That is now exceeding the red supply at 11.4 million for the first time ever. And those lines have now crossed. They're pretty close in this year, but what we were projecting has now taken place, that the yellow supply and shipments in the U.S. are now exceeding those for reds. This chart then again is a little more detail on the current crop red shipments to date. Again, that background is the 3-year average in the dotted line this year, or last year's numbers, and the solid red line is this year's actual shipments to date. You can see that trend that we just looked at is continuing in the front end of this crop year. Certainly that current shipment line is below the 3-year average. In most instances, there have been a couple of weeks where it's popped up above, but for the most part, it's been below, as well as last year's numbers. So the current numbers down 8.6% versus last year and 9.1% below the 3-year average to date. And in summary of the red potato supply data that we just looked at, the average 10-year annual growth rate for red potato shipments into the market down, it's a negative 3.5% per year. You just saw that on the charts that we just showed. Some of the major shifts for this current crop year from last year, the Red River Valley had a much better crop. They're up significantly, over 50% increase in their red supplies. And the San Luis Valley, although they're a more minor player, their volume isn't anywhere close to the Red River Valley, but they were up about 22% in their red supplies. Some of the other major shipping areas for red potatoes, the central Minnesota area, Skagit Valley, and Texas, those were all somewhat flat. A couple of them were up very slightly, but you can call those areas flat. The large downturn in reds came from 4 major regions. That really drove or really offset that increase you see there in the Red River Valley. Florida down almost 30% in their red shipments. Kern County in California down about the same, almost 30% as well. Idaho's down 23% in their red supply, and Wisconsin is down 12%. Canada, likewise, kind of like these areas in the U.S., are also down in their imports, or the U.S. imports from Canada being down 19% from last year. So what does that mean for pricing? Certainly we're seeing more stability, even though the Red River Valley has a big increase, the overall red supply being down somewhat from last year. That price continues to be more stable, certainly than the market swings we saw 5 or 6 years ago. That utilization of market information and grower collaboration that we continue to see among United members continues to help stabilize that pricing in the red market. And the current pricing, again, using a 10 5-pound bale price as a proxy, continues to be in that $16 to $17 range. So strong market, quite honestly, for grower returns. And we look forward to seeing that continue actually for the rest of this crop year. We'll now shift gears to the russet potato category. And here you see the 10-year trend of U.S. fresh russet potato shipments starting back with the 2013 crop. And again, similar to reds, if I was to put a trend line on this, it would certainly be in the downward direction, but there's a few other things that are impacting the russet situation, certainly. Going back to the mid-2010s, you can see there was somewhat of a level, I guess, kind of supply situation. It was just under that 75 million hundredweight range. 2015 crop was a little bit of an anomaly there. But for those kind of mid-2010 years, it was kind of up in that 74 to 75 million range, and then started turning down, leveled off a little bit for a few years, and has continued a pretty dramatic decline these last two crop years. This current year, we're projecting the lowest by far in modern history of russet potato shipments at 61.7 million hundredweight. That's even down from the very low levels of last year at 63.9 million hundredweight. There's a couple drivers certainly to note in the last couple of years, most notably in the Pacific Northwest, where significant heat and some other forces of Mother Nature really took a dramatic toll on the yield situation, both in the Columbia Basin as well as certainly in Idaho. Idaho also had a pretty dramatic acreage reduction, acreage being down a little over 8% over the 2021 crop even. So with yields coming down as well as acreage, that's having a pretty dramatic effect on the supply situation. So this is somewhat more indicative of that supply situation than any long-term changes in the demand situation. This chart here has a little more detail on the russet potato shipments for this current crop year and how we expect them to play out volume-wise. And this chart has a little more detail than the red and yellow charts that we looked at that were similar for the weekly shipment projections. Again, similarly, this yellow background is the 3-year average for shipments. The blue bars to the left are actual weekly shipments, and the orange bars going forward are the projected shipments going forward from essentially today's date in the first part of January. The other thing that we're also showing on this chart is the weighted grower return index. So that dashed green line that you see down there is last year's weighted grower return index, and compare that with this year's weighted grower return index. That's the red heavy dashed line you see across the top, coinciding there with the actual shipments at the end of December. Talking first about shipments, you can see in the actual bars there on the left side, there were very few weeks where we either hit or exceeded last year's or the 3-year average numbers. It was much more likely that they would be well below the 3-year average. And then going forward, it's a very similar story. You can see those bars certainly out into the late spring and early summer being well below the 3-year average, and also somewhat below last year's numbers in a lot of instances. There's a few weeks where it will actually hit last year's numbers, but not until kind of that July time period at the end of the crop year do we expect them to even potentially exceed last year's numbers. So now turning our attention to the grower return index, the weighted grower return index. Again, that's taking the 4 major russet shipping areas, Idaho, the Columbia Basin, Wisconsin, and Colorado, and averaging their GRIs by weight, by their shipment volumes, to give us this weighted GRI number. You can see it's pretty impressive what's going on here. Last year, we started out through the harvest window kind of maintaining that $12 to $13 range. There's always that little dip that we see towards the latter part of harvest and into the time frame when the cellar doors go shut, and there was that little dip, but nothing like we've seen in previous years, and then it recovered up into that $10 to $11 range going throughout almost all of the year. When we got towards about Memorial Day is when it really started increasing pretty significantly. again, it became very apparent that supplies were going to be tight and short, and those increases really started happening, even though we had been projecting that that was going to happen back in the spring or before. But you really saw that that grower return start to increase all the way up by the end of the crop year. Last early August into that $25 range, and then that continued through the month of August pretty incredibly towards Labor Day, all the way up on this red dotted line. You can see that spike there peaked out around almost $35 on the total weighted average GRI for the U.S. And then, of course, it came down somewhat through that harvest window, as it always does. But certainly didn't fall to the levels we've sometimes seen in recognition of the supply situation that we're projecting going forward. It did kind of dip out there in that early part of October, but then started to recover again, and we're now back close to that $22, $23 range for that total weighted GRI. And again, based on how we see this crop and the volumes and the projected shipments playing out, we certainly expect that trend and that strong marketplace to continue, and it needs to. If you look at what's happening with the cost of production situation, the shed run costs, all those things being up dramatically with the rest of the inflationary environment, certainly it's those returns are warranted and needed by the grower to have that long-term stability, so to speak. I always like to do this little exercise on kind of exploring the relationship between the supply data and the pricing, and how we're seeing that play out and what that correlation is. So the average 5-year U.S. russet supply is right below 70 million hundredweight per year, 69.86 million hundredweight per year. Then you can see that all region average weighted GRI for that same time period, the previous 5 years, is just a shade under $10, $9.84 a hundredweight. This current year, like I showed on that initial chart, that 10-year trend chart, we're projecting a little over 61.6 million hundredweight will be shipped from this current crop year. And the average all region weighted GRI to date for this current crop year is a little over $23 a hundredweight. So what is that russet potato supply price correlation? We've always talked about the inelasticity of the russet potato market, meaning that very or relatively small changes in the supply situation have a resultant effect of a much larger change in the price side of the equation. And it's typically been, historically, you remember, we've always kind of looked at it, and it's always kind of been in that 6 to 7 to 1 range in terms of that correlation. This year, based on that data I just showed on that previous slide, almost 12% lower supply is so far this year giving a almost 138% greater return. So you can see that ratio is higher certainly than 7 to 1, but sometimes when you're out in at the end of the bell curve, so to speak, on some of these things, you'll see some different changes in that correlation. Certainly, this tells us that, and the example I always use is, a grower by harvesting, or if he's thinking about planting 100 acres and he decides to plant or harvest 88 acres instead, his return based on this year's returns would be $23 versus if he planted that full 100 acres, having a return around $9. Last year, if you remember the numbers I showed, it was at that time of year when we did this a year ago, it was a 6.1% lower supply, and the current returns for that year compared to the previous year were almost 41% greater returns. So that was kind of closer in that 6 to 7 to 1 ratio range. So I'm going to shift gears now and talk about some of the things we're seeing as far as an outlook for the upcoming crop next year. This chart, as in previous years that we've looked at this, is the alternative crop price changes year over year, 2021 to 2022. This slide is courtesy of Ben Eborn there at North American Potato Market News, and we certainly appreciate his help and input on this. First of all, the Idaho Grower Return Index is up almost actually over 67% year over year, from 1036 a year ago in that October-December time period versus 1734 as an average for this year. That's compared to wheat, which is also up, certainly not up as dramatically as that, but up almost 10%. And then you can see the rest of the kind of basket of goods that we look at here: barley, malt barley, alfalfa, corn, and soybeans, all up, certainly double digits, and well beyond that in many cases. So it's helpful to bear in mind also that we're talking about these quotes from October based on USDA's reported numbers. What a grower might look at is the futures market compared to, if he's comparing what he can get on a return for potatoes versus alternative crops, it would be in the future. So if you looked at the futures market, it wouldn't be quite as dramatic as this increase. For wheat as an example, I think the outprice 10 months going out into that September-October time period for next year is down in the $8 and something cents range. So a grower might look at that instead. It's still going to be up a little bit, but not quite as dramatically as you're seeing here on this chart. As we look out towards next year's crop, certainly that alternative crop pricing remains strong and up over the previous year. When you look at the model and put all this stuff into the projection model, it would show actually a somewhat modest increase of perhaps 1 to 2% increase in acreage, just based on that relative strength index comparing the potato returns to wheat returns and that other basket of goods that we looked there on that previous slide. But there's certainly other things that are going to come to bear in all of this. First of all, the cost of production continues to increase, the water situation, and the seed supply. We're probably seeing a 20 to 30% increase again in many of the inputs. That's again over a similar amount of increase from last year. Certainly Colorado and Idaho have water situations that could present challenges. We'll see how the snowpack unfolds during this year, certainly in those areas. There's also potentially some seed supply issues and challenges out there. We'll have to keep an eye on that. It's more related probably to specific varieties than anything, but certainly something we need to keep an eye on. The processing situation continues to be in a situation of very strong demand increases. In the past, that has incentivized additional acreage, potato acreage, and additional production. There's other external market factors that we need to keep an eye on and understand. The international markets access, certainly the Mexico market and what's happened there continues to evolve and will probably increase more as we go along, as that access continues to be available. There's ag labor uncertainties, certainly, based on immigrant and migrant labor situations. But all in all, I just want to remind everybody that, if we return to volume shipped in prior years, meaning if we went back to some of those previous years that we looked at on that 10-year trend chart, the market tends to always value that crop the same as it did in those years. So it's just kind of a reminder of how that equation works, just like that supply price correlation that we looked at and the inelasticity of the russet potato market. Just kind of bear that in mind, that those volumes shipped in previous years, the market will, if we went back to that, the market would tend to value that crop the same as it did in those years. So with that, I will close, and thank you all very much for joining us here today. Thank you all again.